All right, what is up, tycoons? What's up, traders? Super excited for today's video. Going to take a look at Moonbeam today, okay? Ticker symbol GLMR. I recently did a Moon River video and someone requested an update on Moonbeam itself. So yeah, we're going to jump straight into it. What we're going to do is we're going to explain what these sets of three lines right here are on the chart, why I use them, okay? And then we're also going to take a look at our relative strength index as well as the MACD, okay? You can combine a lot of these things together to really help understand price action and be able to understand why things are going up sometimes and why things are going down, and really just, give yourself an edge in the market. When it comes to trading, trading is like going to battle, trading is like going to war. You need to have an edge. You need to have the proper weapons. You need to know how to use those weapons so that way you can increase your odds of success on the battlefield. So that's what we're going to cover in this video. Smash the like button and subscribe to the channel. We're going to jump straight into it. Okay, so what you do is if you're in a downtrend, right, you use these three levels right here because nothing moves in a straight line up or in a straight line down. Rather, you get a move up, retracement, continuation higher, or you get a move down, retracement, continuation lower. So using these three levels, these are the Fibonacci retracement levels. Now, in specific, these are the three most common and well-respected. Those are going to be the 38.2, the 50%, as well as the 61.8% retracement levels. So if, right here, we have a swing high, we connect it down to our swing low. See, we come down, we retrace up to our 61.8% level, and then we continue heading lower. So we get that trend continuation where we put in a low, then a lower low. Right. And then what do we do again? Right. We have a new swing high now. All right. And then we move down, we retrace, and then we reject right around our 61.8% level again. And now we have a new high up here. But notice how we didn't really put in a new low. Like technically we did, we just barely went lower. Right. So I did put in a new high and a new swing low. And now we got the reversal. So this is exactly what a reversal looks like and how you can spot trend continuation versus a reversal. A reversal is going to look like this. When you come down, you retrace, consolidate, and then break through your major retracement levels, right? So remember, this is trend continuation and then a move up, retracement, consolidation, breakthrough of those major retracement levels. That's going to be your reversal, right? So in this case, we got the move down, retracement. Look at where we did. We came right back to the 38.2% level. Okay. And instead of breaking below that level and continuing lower, as we did multiple times in the past, we actually found support there, broke through those major retracement levels, and got a reversal where we put in a high, a higher high, a higher high, and a higher high again. So it's very important to use these and to start learning how to use these because it can help you identify trend continuation versus trend reversals. Now, if we take a look, we've had a very nice uptrend, okay, as of here recently, after we got our breakout and broke through our major retracement levels. So now, if we do get some type of a pullback, okay, these are going to be our three retracement levels of support now. So if we move up, retrace, we can continue heading higher. And I have some bullish price targets to the upside in case we hold above our major levels. Those are going to be 0.595 as well as 0.6487 are going to be the two immediate overhead bullish price targets if we continue bullishness and are able to make new highs above the previous highs that we've made. Now, remember, if we do pull back, okay, 0.4741, 0.4436, and 0.4130 are all going to be healthy territory and healthy retracement levels, ultimately that we need to stay above, right? So if we do end up getting any type of a pullback, we want to hold above these levels and not break below, as that is how we could spot a potential reversal of this new uptrend that we've started. Okay, so now that we've established that and how to use those, let's go ahead and take a look at our RSI real quick. There's something known as divergence that occurs many times in the market. And what that is the price action will do one thing. So here we have a high, right, highlighted by this circle. And then here we have another high. So clearly we're making higher highs, right? And that's a simple term that you guys can learn, but we're actually making a high and a lower high on the relative strength index. So when you're making higher highs on price and lower highs on the relative strength index, what's happening is you're losing relative strength as the token is going up in price. The relative strength index should mirror it because it's following the relative strength of a token. It's going to measure the relative strength of a token at its given price. So if the token's higher in price, but lower in relative strength, that's a term known as bearish divergence. It indicates you could see some type of a pullback. And sure enough, we did get a pretty significant pullback, but nothing that ended up reversing our uptrend, right? So that's a good sign that we were able to find some support. If you notice, we found some support right around that 0.4130 level. So we want to continue to hold above those levels. Now, what you look for when there's a bearish divergence and you want to be bullish, okay, is this is exactly what you look for. You look for a break of that bearish divergence trend line, and then you want to flip this prior resistance right here into support. So notice how we've done that, right? We haven't broken down through it. If we break down through this trend line, that's going to be a term known as a look above and fail. And to explain that, so you guys understand the terminology behind it, it means that bulls were able to look above and break through, but ultimately they failed when presented the opportunity, when bulls presented the opportunity to really take over and push this thing up higher. If we end up not doing that and breaking below, it's going to indicate that sellers were still in control. Even though bulls had the opportunity, they didn't take advantage of that opportunity, ultimately failed, and it's going to be more of a bearish indicator. So if you want to be bullish on this right now on GLMR, what you want to see is you want to see this relative strength index, stay above this trend line and start to curl back upwards, right? We don't want to see the bulls fail right here. We want to actually see them take control, okay, and head over. Now you can also use the MACD to spot potential entries and exits. So to do that, what you're going to do is pay attention to the red line here, and once it crosses above that blue line right here, this is actually an entry signal. So we actually got a nice entry signal on the MACD here that ultimately ended up starting this rally and indicating we could see some really strong momentum. And what do we end up getting? We end up getting a MACD sell signal right around this area here. And then we have a little bit of bearish divergence shortly afterwards. And what do? We get some type of a pullback, right? So if you're monitoring these indicators and you're using some of these things, then you're not caught so much by surprise, right? When this thing goes from what price is this right here? Let me get my face out of the way. When this thing drops from 0.55 all the way down to 0.40, you're not really caught by surprise, right? You're understanding that we could see some type of a pullback because the MACD crossed over to the downside. We have some bearish divergence, but you know what to look for, right? You know we need to hold our major retracement levels of support and look for buyers to step in right around those retracement levels, because otherwise it's just, a healthy retracement and nothing really to be scared of, because things can't go in a straight line up or in a straight line down. So hopefully you enjoyed this video. Hopefully you learned something new. If you did, smash that like button, subscribe to the channel. Remember, this video is not financial advice. All I'm doing is just going over some different indicators, some different strategies that you guys can use to help really understand the price action a little bit more, and maybe just, not be caught by surprise so much by sudden movements or movements that you really weren't expecting when there were possible indicators to help you, predict some of that future price movement.